Hey, good evening, Facebook family. I know it has been a minute since I've been on. Happy New Year. Happy 2024. We are back in SEN studio, and tonight I'm joined by Mr. Ed Taylor. Tonight we're going to be talking about life, all various phases of life, but specifically life insurance. And I know this topic sometimes can be an interesting one, right? But tonight we want to talk about how life insurance impacts your life, impacts your business, impacts your family, impacts your children, impacts the community, right? There's also something called endowment. I want to make sure we touch on that tonight also. Because that's something that can benefit organizations. But before we even get into the meat and potatoes of tonight, I want to say that the best is yet to come for each and every one of you. I know as we crossed over from 2023 and entered into 2024. We have great expectations for this year. I know I do, right? For some of you that may not know, next month we have a business conference. It's the Level Up Business Conference 2024, taking place on Saturday, February 24th. Doors open at 10 a.m. All the workshops kick off at 11 a.m. It's something you do not want to miss. You can go to Eventbrite and just type in Level Up 2024. If you have any questions, just send me an email, ct@catherinetrotter.com. At this time, I want to introduce Mr. Ed Taylor. He is my mentor in the life insurance industry. He brings a lot of value to tonight's conversation. And we're going to be talking about various types of policies that can benefit you and your loved one as you continue to grow. So you see in the title, it talks about let's talk about life. And a lot of times when we think about life insurance, unfortunately, I think people just look at it in a very black and white term versus whole life. It's only for death and burial. It's so much more to it than that. So before we get into the meat and potatoes, Mr. Taylor, I want you to come on. I want you to share a little bit about who you are, your background. You've been in the industry for a long time.
Yes.
Let people know why you initially got into the industry. Why are you passionate about life insurance? So just, let our listeners know a little bit about you.
All right. Thank you for that wonderful introduction, Catherine. I hope I can live up to that. Again, my name is Ed Taylor and been in the business for nearly 44 years now. This April will be the 44th year. And as you stated, I am passionate about the industry. And I got into the industry because I wanted to help people. And I knew that life insurance would do that. And I just couldn't think of anything else that would help people protect their families, provide for their legacy. And it is also an estate building product. And I couldn't think of anything better than life insurance. So again, it's been 40 plus years for me, and I really enjoy what I'm doing.
So in those 40 some years, what would you say those aha moments, things that you learned about life insurance that can really benefit families that's watching this episode?
Well, I know particularly for the minority community, we are about 8 to 9 times less the wealth of the majority community. And I've always looked at life insurance as being the equalizer for us, so that we can start taking care of our families and providing for self.
Now, when you talk about families, there's certain policies that's out there to help families as it relates to life insurance. What are some of those top products?
Well, don't look at a particular product per se. I just
or how would you frame it? What would be beneficial for a family? Let's say it's a family unit. What would you recommend?
I would recommend protecting your gross income 8 to 10 times. So I would say you really want to think about, if something happens to me, I don't make it home tonight, what will happen to my family?
Okay.
Is my income protected?
Okay.
And that's what life insurance.
And you said 8 to what times?
8 to 10 times your income.
So when you're thinking about getting an insurance policy, the policy, are you talking about the face amount?
Yes,
The face amount should be 8 to 10 times what your annual income is.
correct.
Okay. And now let's say they want to take out a separate policy just for their child.
Mhm.
How would that work?
Works the exact same way. I believe in protecting youngsters because when we get the policy on them, it will grow with them, and it would protect their insurability for the rest of their life. And again, it gives them a longer time to accumulate wealth. So I really would recommend you getting that on your kids as well.
Now, I've heard the younger the child is, the better, because the cash value can grow with them over time. I've heard stories where, actually, it's a colleague of mine. She is from Cali, but she lives in Texas. And her mom took out a policy on her when she was little. And when it was time for her to go to college, there was enough cash value in that policy where her whole 4 years was taken care of. So can you elaborate on what type of policy is that?
It is a type that would build cash,
Mhm.
and we call it college funding.
College funding.
College funding, and I'm glad that you do know someone who actually experienced that, because many of us do not think that that's possible. But again, that's what the majority community have been doing for decades, and that's something that we need to do as well.
Yeah. So for anyone that's going to be watching now or watching later, if you don't have a young child, you may be a young child in your family. We're talking about not just pushing life insurance just for the sake of pushing life insurance, but it's the power in what you can use life insurance for. Again, think about students that go to college. We know there's so many stories, students coming out of college in debt because they could not pay that those institution fees, right? So let's think about how we can leverage. And I think that's one of the words that I've learned over the years when thinking about life insurance. Life insurance is leverage, right? So for any families that's out there, if you have a young child, you want to be thinking about what type of life insurance product, not only just as a family unit, but also for your child as an individual policy, so that policy can grow with your child over time, so the cash value can grow with your child over time, right? And so I want you to be thinking about that, but there's so many different policies. There's a debate, I think, out there, term versus whole life. What are your thoughts about that?
Well, I always like to preface it by saying there is no bad life insurance, but if we can get the permanent, that is always better, because again, that money is growing as the years go on, and you can use that as your own bank as you get older. By that I mean that instead of you getting a loan, as you mentioned earlier, for going to college or purchasing a home or whatever it is, purchasing an automobile, you will become your own bank, and you will get the money from yourself, pay it back to yourself, and you are building wealth that way.
So life insurance products, again, is leverage. It's leveraging. It's a tool that you can use as you build yourself, as you build your family, as you build your business. So you talked about wealth creation. A lot of times people are not connecting that with life insurance policies. And one of the things that I often heard, well, life insurance is just for your death and burial, is when I'm gone. How can I use it while I'm alive? There's something called living benefits.
That's correct.
Can you talk a little bit about what is living benefits?
Okay, living benefits means that you would protect yourself. Let's say that you would have catastrophic illness such as heart attack, stroke, cancer, end-stage renal failure, as well as critical injury. You would be able to come and access money from the life insurance while you are alive. It also has chronic illness. If you need assistance performing any 2 of the 6 activities of daily living, bathing, dressing, continence, transferring, You will be able to come to your policy and access benefits that way as well. So you can use your policy for terminal illness, things like that, long-term care. You will be able to get access to those funds while you are alive.
Okay. And now in that process, so you're accessing some of the funds. So now does that decrease your face amount?
Yes and no.
Okay.
It depends when you are accessing it. So what you are doing is you are using part of the death benefit while you are still alive.
Okay.
Some cases it will detract from it. Other cases it will not.
Got it.
It
Okay.
depends.
And so again, tonight's topic is let's talk about life. We're talking about life insurance. We're talking about how to leverage life insurance. We're talking about wealth creation. We're talking about living benefits, because I think a lot of times you know, we don't know what we don't know. And living benefits, as you mentioned, is for chronic illness, critical illness. Now the process to access those funds, though, is it difficult? Let's say someone is in a situation, they got chronic illness. What is the process for that individual that has that policy, that have that living benefit rider? How do they actually access it? They reach out to the insurance company. What are some of the fundamental steps?
Actually, I prefer my clients to reach out to me,
Okay.
and that way I am in the middle of it, because I always want to know what's going on so that I can assist them. If I'm not available, they certainly can get a hold of the company. And what happens is that their doctor would interact with the company's doctor,
Okay.
and then they will determine the severity of the injury and what would be available to them.
Okay. So based on the severity of the injury, that factors into how much money they will be awarded from the policy.
Correct.
Okay. Now, do they have to pay that money back that they used?
No, they do not.
Okay. Okay. So again, we're talking about life insurance. We're talking about life. These things happen. People will run into illnesses. No one anticipates having a critical illness. No one is anticipating having some type of chronic illness, but it happens. And when life happens, the question you have to ask yourself tonight, do I have a life insurance policy with living benefits built in? So this is the perfect time at the top of the year to do a life insurance review.
Correct.
What are your thoughts about reviewing life insurance policies at the top of the year?
I think it's something that should be reviewed annually because things change. And we always want to be on top of the changes. We want to keep pace with the changes because, like you keep mentioning, life happens, and we always want to be current as to what's going on.
Right.
So things change, so we want to make sure that our plan change when we change.
And so what I would encourage everyone to do is to pull out your life insurance policy. I want you to pull it out. I want you to review it. I want you to see what benefits do you have in your policy? Is it just term? Is it whole life? Do you have any riders? So oftentimes when you think about life insurance, it's something you may hear called riders. So when I talk about those living benefits, every policy does not automatically come with living benefits. So I want to put that out there. That is something that is added on as a rider. Okay. So you want to make sure, and you want to look at your policy to see what type of riders do you currently have built into that policy. And if you do not have a policy with living benefits, I strongly would suggest that's something that you want to incorporate. So you may need to adjust the current policy that you have. I know in some policies, if someone has term, you can convert it to a whole life, but only if you have a special thing. What is that thing you have to have?
It would have to
Convertible.
be a convertible policy. So as long as it's convertible, it protects your insurability, and it allows you to change that to permanent building. And also would like to add that the riders that you are talking about, they are no cost riders.
Yeah, and
So
that's big.
So you're not paying extra for that.
Right. But the thing is, if it's not checked off at the time when your application is submitted, it's not, someone's not going to automatically do it.